Okay, hi everyone, and welcome to today's BGL webinar. My name is Jeevan Toki. So we thought we'd do something a little bit different for the end of year and recap what's happened over the course of the year. So these are all things BGL, all things smarter SMSF, and all things that's happening across the SMSF landscape. Like always, today's session will be recorded and you'll be able to view that anytime you like via YouTube channel, and you will be sent a link to the recording. Any questions you have, enter them there in the Q&A panel, found either probably the top or the bottom of your screen. Okay, like always, I'm joined by Aaron Dunn, CEO and co-founder of Smarter SMSF. Welcome, Aaron.
Thanks, Jeevan. Great to be here once again for the final time for 2023.
That's right. So finally we had some sunshine out here in Melbourne. It'll be good to
that's right. Yeah, absolutely.
So we'll go through. So a little bit different to normal, rather than showing bits of software. We're just really going to recap the year, as I said. We're going to keep things rather high level, so we're not going to go into a lot of detail. So just a reminder of each of the month's recordings from this year are available on our YouTube channel. So if you want to go and explore anything that we talk about today in a lot of detail, go back to one of those previous months and you'll be able to view that and go through the details there as we go through it.
So, James, I think it's a really good, I was just going to say, it's a really good reminder for people that you very quickly lose sight of what has actually gone on throughout the year, both from a software and technical point of view. So I think people get a lot out of today's session.
So any questions you do have as well about any of the topics we discuss, we're happy to chat about at the end. So feel free to put that in there in the Q&A panel. So they're through now. First of all, January. So January was probably a rather quiet month. Everyone there was on leave, and not a lot happening out there. From a BGL perspective, we released the ability for smart dogs to be able to email any document to any SMSF or any entity within Similar Invest 360. So every entity has its own unique email address that you can use to get in the documents into the application. February, so I think people returned from leave and things picked up a little bit more. So I guess from a BGL perspective, we added the ability to lock your work papers. So where the year was completed, obviously you can go through and lock it. It's going to show there on screen, and that means that obviously any users that don't have admin access can't remove that lock and can't obviously edit any prior year working papers. We released with both Simple Fund 360 and Simple Invest 360 integration with Sila. So Sila is a crypto tax calculator that actually connects to all the various exchanges that they can or can load in CSV files, produce tax reports, produce portfolio reports, CG position, and the main thing for us is insert transactions into Simple Fund 360. So both BGL and Smarter SMSF, we both attended the SMSF Association's National Conference, which was hosted in Melbourne this year. I took off the slide there, and I forgot where it was. It was that long ago. So Aaron, do you want to maybe talk a little bit more about the conference?
Yeah, so I think generally it's always great because you get some real insights from government and obviously what's happening at a policy level there. So it is something typically that I present at, and again, presenting as part of the 2024 conference. Next year is in Brisbane. So yeah, so if you've never experienced it before and you're all in on SMSF, I would certainly highly recommend to get there. And if you are going, make sure you come past and say hi to either Jeevan at the BGL stand or us at our Smarter SMSF stand.
Yeah, absolutely. And we were just discussing beforehand that obviously the assistant treasurer did speak this year and was reluctant to say anything about the $3 million tax as well.
Correct.
Okay, so on to March, for this year. So March from a BGL perspective, again, BGL was returned to our live events. So we ran our masterclass series around the country in 6 out of 7, I think, yeah, 6 out of 7 capital cities. And we that's really just promoting what is best practice in terms of using our products. And again, we'll be running those across the country again this March. So details of that will be released accordingly. And obviously, I think we will obviously send emails out providing the content and what's being covered. From a product point of view, we released our investment unit prices report. So this was great from an audit perspective of looking which price was used last, what was the date of the last price, what was the source of that price, was it manually entered, did it come from the ASX, was it international price, etc. And where the price was manually entered in, who entered that particular price in. So that was something that was well received by auditors. Aaron, over to you in terms of SMSF news.
Yeah, so the big ticket items then that we saw probably in between sort of late Feb and March, so through that March quarter, of course, was the fact that the government had indicated that they were then going to legislate an objective of super. And one of the things that you're going to find as I kind of talk throughout today's presentation is the iterations that we've now seen with much of this legislation. And ultimately, as we get to the end of the year, some of this, in essence, remains before Parliament, but introduced into Parliament. So into 2024, we will see a lot more certainty around it. So the objective of super ultimately hasn't changed from what you can see as being defined on there. And once finalised, this is naturally going to shape the way in which the government will look at policy. And quite clearly, when we think about the Division 296 tax, that additional earnings tax, we did see shortly after the announcement of the objective of super, the announcement of the new higher 15% tax on higher account balances. They are above $3 million. So those were the two big bits of news that started the year off. And then from our side of things, we really started to focus on a couple of key areas. One was our ABN TFN integration, which is now in full flight on our platform. We've got a lot of people obviously going through that automated process as part of your fund establishments. And we worked with the BGL team there within Simple Fund 360 to enhance the endpoint. So you've got a complete data set to be able to produce your pension commencements inside Simple Fund 360. So that work had initially commenced, and as we went through the year, we then obviously launched that in addition to some additional features in that pension one as well. And again, just a few form updates that we went through throughout the year as well.
Oops. And Aaron, you're on your SMSF day around the country. I don't know if that's the right month, hopefully.
Yeah, so we kicked those off in March, and then they went through to April. So same sort of thing, Jeevan. One of the, obviously from a masterclass point of view that BGL does, we run our own face-to-face events on the latest technical and strategies and all those sorts of things. So we do that in 5 capital cities around Australia. We actually have just recently launched our 2024 events. So we do actually have a super early bird on sale right now through to the 31st of December. So you can have a look there. But again, if you want to sort of get your technical feel and really interact, case study format, and go through all the latest things, our SMSF days are a great opportunity to enhance your knowledge and get some real practical takeaways. And I know BGL have been a supporter of those events since we kicked those off in 2016. So we're up to whatever that is now, 7, 8, whatever it is. So yeah, they go very well. So yeah, hopefully get to see many more people again there in 2024.
Cool, and we'll share the link with all attendees for today as well. Cool, so over to April. So I guess from BGL's perspective, we continue with our Smart Docs technology. So we now have the ability to read rental statements, and that would extract the data there from the rental statement and automatically create the transactions for those. So that was a sort of real game changer, as a lot of the transactions around the properties tend to be quite manual, obviously reading things like loan contracts, rental statements, disbursements, etc. So that was the real sort of changer that we saw, and obviously that, you know, very similar advanced over the course of the year. We released a new function for consolidated reporting, so it's the wrong screenshot there, but that was the ability there to obviously consolidate across both Simple Fund 360 and Simple Invest 360 in terms of your entity. So really looking at a client group, looking at the investments across a client group, or family group, looking across, obviously the performance and items like tax there as well. For our shared data pack, we actually added advanced share registry as a supported registry going through, and we added a new interface there for the management of the contract note service.
Now, the next thing was, of course, the evolution of what was this 15% tax. So we didn't have a name for it at this point in time, but what we did know is that the government started to raise a lot of the technical issues. So we moved to a consultation paper and we started to see a little bit more about how these measures would work, clearly on the basis that we would get to go and have regular consultation with the government as they tried to look through this and ultimately flag some issues, which naturally included things like the unrealized capital gains, the lack of indexation around the threshold and so forth. So it'd be fair to say we were far more buoyant at the start of the year about how consultation would work, and quite clearly over the year that has changed. But ultimately what I would say is as we evolved through the year, there wasn't a great deal of change, and a lot of that was because of really the closed shop that the government's taken towards this and their view that it's not going to impact that many people. Quite clearly, their 80,000 sort of individuals that they're saying is the figure that they've locked in and trying to communicate. The reality is I think it will be a lot more, and we did speak about that, and we'll be speaking a lot about that, as I said, in our SMSF days too. And then the other side here is, I guess, really expanding on what we spoke about earlier with the BGL pension docs integration. One of the things that we have released this year is an updated pension document form that now allows for what we call a two-step approach. So that two-step approach is if you don't know the balances and you want to start that pension at a particular point in time during the year, you would be able to do so as a two-step process, and you can see some of the navigation from those screens there. You can also do it in a single step, and that really goes through our standard process of the oral request. Importantly, if you do that two-step process, we then created the saved order, and it would allow you to refresh that data via the API within BGL to be able to populate that second set of documents. We do have a number of key features within our pension docs that are, I guess, unique to the way in which we produce this. We've got things like the type of discretion that you might have around the payments. We've also got things like how you want to track your levels of reversion, whether you want to make that above minimum pension election to treat those above minimum amounts as commutations, and the payment frequency and so forth as well. So if you haven't seen those, I'd strongly suggest having a look and trying to understand the nuances. And again, we did speak about that during the year in a bit more detail, and you can go back and refer to some of the examples that we went through.
Okay, over to May now. So for SMSFs, we released our tax update, and obviously there wasn't much going on there, which is really just I think almost a rinse and repeat of 2022. Our document screen. So we added some functionality there with the ability to rename documents and the ability to send reminders for documents which have been sent out for digital signing. Our property console, this started again the path of adding new property valuation providers. So we added two particular providers here, one being Compare and Save. So Compare and Save can be used to look at loans or loans for existing clients, look at the current rate they are and compare those to existing rates there on the market. So there's no charge in using the comparison. It's something they can use, and it's great for client discussions. So that can be used across both SMSFs, individuals, and investment properties. We also added then the link there to Property Pricer, who offers property valuations for residential properties across Australia. So reports, we added a combined rental statement. So that's the ability of the existing rental statements to group all the properties for the particular entity all together into one, and we updated the super choice form. The Simple Invest 360, we added the ability for inter-entity distribution journals there at year end. So as it says on screen, where the actual beneficial unit holder is an entity in BGL, so such as a SMSF or a company, another trust, etc., the profit process will create a transaction or prompt you to create a transaction and automatically post those journals in the other entity. Over to you, Aaron.
Yeah, so from here, I guess we started to see with the federal budget, we were unsure ultimately where the government was going to go with the budget. It did remain relatively quiet, but the two key issues that we saw, one again was the fact that they're pursuing this Division 296 or better targeted super concessions legislation. And as I mentioned earlier, there was a real lack of response by government from the consultation that had happened, and again, really a failure in the time frame to really have any sort of robust discussion on it. The other part was the fact that our NALI provisions, so our non-arm's length expenditure requirements, we did see an initial proposed 5 times multiple. We did see then through consultation the government come back and settle with what they see as a 2 times multiple on the level of general expense, where that amount has either been incurred or not incurred as the difference between what should have been charged on an arm's length basis to what was actually charged there as well. And I'll touch on a little bit later as that has progressed as to where we are now. But the most interesting thing ultimately from that is that we did have a specific set of rules here being introduced for SMSFs, and APRA funds have ultimately been carved out. So the question has always been, do we actually still have a problem with these non-arm's length expense issues as they relate to non-arm's length income? And that had been the debate in essence for the second half of the year. And then once we get to November, I'll give you a bit of an update as to where the lay of the land is now. The other thing that was worth noting was our temporary minimum pensions did finish at the 30th of June, 2023. So making sure a lot of our clients now are restructured in essence back to the standard minimum pensions. And that does relate to accounts-based pensions. So when I say accounts with an S on the end, it means any pension that is linked to the account-based pension rules, which naturally are our account-based pensions in section 1069A, but also our market-linked pensions. So they could have taken 45% of that previously stated amount. That amount moves back up to the 90% of the calculated amount with that plus and minus 10% variance. There's some debate discussion around payday super, and there is, I guess, a question through the consultation process about what role SMSFs might play in payday super. Naturally, SMSFs aren't part of the MAT system, which is the reporting system that APRA funds use about contributions. So there is, I guess, some discussion about what that might look like. And the other bit is that we saw our general transfer balance cap, the fact that inflation had really been running rampant at this point in time. We not only saw a $100,000 increment, we actually saw a $200,000 increment. So our transfer balance cap jumped up from 1.7 million to 1.9 million, which naturally impacts things like the amount that can be moved into retirement phase and the amounts that can be made under non-concessional contributions. And the last thing here on our side of things was just with our fund establishments as we moved into our sort of 1st of July run. We started working on what we call our doc flows. So this is I guess a workflow of the way in which you can order different forms. So one of the things here that we did through that fund establishment is taking data from your company into your new fund and then applying for your ABN TFN. But as part of that process within the relevant actions, you can then be sending that data back into your BGL software, whether that's CAS 360 to set up the company automatically, or whether it was back into Simple Fund 360 to automatically set up your new fund. And even once you got your ABN confirmed through the ABR, you'd be able to update BGL through that final action once that ABN had actually been issued. And there's a number of things that we're working on with our doc flows in the back half of the year and as we move into 2024.
So June, getting into sort of almost a new financial year. Obviously, after the SMSF annual return, we released the trust and company returns there in Simple Invest. And then I suppose a lot of the changes Aaron was describing there, and over the course of the new financial year, a lot of those updates were applied in terms of obviously the pension limits and new transfer balance cap, eligibility for non-concessional contributions, etc. Over then to July. So as Aaron just touched on in terms of the quarterly dates, TBAR, moved to quarterly for all funds, so all of our alerts, dashboards, etc., are updated within the product. We added a bunch of different reports and enhancements. So we've got a bank feed comparison report, which shows where there is a data feed, what's the data within Simple Fund 360, what's the data actually received by the bank, and actually showing any differences. For example, is the narration clearly different? Have transactions been removed? Is there any discrepancy in balance, etc.? So again, very well received by auditors there. We've added a rollover declaration minutes. For the general ledger, there's a filter now for unmatched transactions, so you can potentially print that out and send it out to your clients for them to comment on the unmatched transactions or provide missing documents. And we've also added there our holding accounts reports. So there's a screenshot there shown on screen, obviously, of the bank feed comparison report. Property valuations, we added another provider, Durotax, who again provides residential valuations across Australia, as well as commercial and depreciation schedules. Work papers, we added a new note, matter for attention for the auditor. So by default, all our other notes are hidden from the auditor user role, but the auditor is able to view those particular comments or comments or notes. And for work paper notification events, we started recording the history, so you can view when things took place. For example, when the fund was sent for review, when notifications were sent between the preparer and reviewer and auditor. For Simple Invest 360, the inter-entity journals I talked about before for trust, we added the same sort of functionality but for companies, and continued improving the consolidated reporting. And then also during July, I suppose Aaron and myself both again attended the SMSF Association's technical summit in Gold Coast.
Yep.
Gold Coast. So it was a 20-year celebration of the SMSF Association. Oops, I think I'm supposed to put another picture in there. But yeah, I suppose again, Aaron, I think the difference between it, correct me if I'm wrong, this one focuses on a lot more sort of use cases and goes through in a lot more detail, rather than just talking about what the changes are.
Yeah, so a lot of it is workshop-based sessions, and I guess arguably built more for specialists, whereas at the SMSF National Conference, you'll have multiple streams with different levels of experience and obviously differences for financial advisors versus accountants versus auditors and so forth. So whereas this really brings it all together under one umbrella, for specialists to understand the different nuances that might exist from a legal perspective or an auditor perspective or an accountant's perspective, administrator, and so forth. Cool. So, Jeeves, you did touch on before the TBAR changes. So we have seen from the 1st of July 2023, all SMSFs now required to report an event that occurs. That's still the most important aspect. If there is an event that occurs, you do actually now have an alignment to that quarter, i.e. you must report within 28 days after the end of the quarter in which that occurs. So if you had, and Jez, I might get you to just show the other side of the page here as well, if you wouldn't mind. We did have our previous framework that you can see here as our $1 million threshold. So that's now gone. And importantly, if you have any events during the last financial year, they technically should have now already been reported by the 28th of October 2023. So that would be one tip I would be saying to you right now. You don't have until the tax return that would be due in May 2024. The fact that these new quarterly rules kicked off on the 1st of July means that all lodgements, effectively from the 1st of July 2022 through to the 30th of September 2023, where you were previously an annual reporter, they are now late. So they, in essence, were due on the 28th of October. So if you haven't done it, I would get your skates on and making sure that you limit any potential exposure to failure to lodge penalties. People always ask me, well, the ATO hasn't issued them yet. When are they going to issue them? We don't know. But you probably don't want to be the first one to get them either. So there will be, I think, a final round of education on moving to this quarterly basis. And then they will move to that enforcer mode, I guess, putting those failure to lodge, which is why keeping your data up to date around the pensions for your clients or those pension clients will be really important, and the communication of using and expectations with your clients about the data that you have in your Simple Fund 360 file so that you can get this stuff done on time. And yes, there'll be circumstances that on the 1st of July, you want to start a pension and you might not know the balances. It's one of the reasons why we built our pension documents in those kind of two-step processes. But there are ways in which you can still report that value at 1 July, even though you might not have the accounts done on time. And again, we did have a bit of a chat about that throughout the year. And you can have a look at the relevant month when we, I guess, discuss some of those issues in a little bit more detail.
Yeah, so I think you can go back and look at the web at that particular webinar, because I think by memory, Aaron, you covered events such as starting a pension 1st of July, starting during the year, death benefits, etc.
Yeah, absolutely. So the other couple of things that would just be worth noting. So we did introduce our AB and TFN stuff into the completed orders within our Simple Funds 360 integration. We did make a couple of important deed update changes. One around the death benefit nominations, naturally the Hill and Zuda decision of 18 months or so ago, and some subsequent decisions thereafter around death benefit nominations. We did make some changes to the way in which death benefits can be put in place and in essence be validated. And then the other thing was, with the evolution of the technology neutrality laws, we then put in a specific rule into our deed that would allow for certain documents that are to occur under the deed. So a good example is the payment of a pension. Then we would allow to use a technology neutral way to do that, i.e. they could be signed electronically or they could be signed using wet ink. We also needed to make changes to the director ID requirements within not only our company forms to start capturing that automatically, but also in the Constitution, so the obligations imposed on directors to be able to get that stuff. And yeah, a couple of other sort of bits and pieces along the way. So again, we have a range of updates that we provide on a quarterly basis as to what we're doing and working on. So yeah, you can access those throughout the year or attend those that we do in, I think it's January, April, July, and October.
Cool. Over to August now, and within Simple Fund 360, we had Smart Docs now. So any documents you load into the application, and we're able to, I suppose, recognize what that document is. Using that tag now, we would identify which transaction using the amount, date, payment date, whatever bits of data that we have within that, and we automatically attach that to the transactions. Where we either attach to the transactions or recognize which account will go to, we'll automatically then start attaching those documents to the work papers. And with Smart Docs, we also added the functionality, very similar to the rental statement we showed before, the ability to read annual tax statements, read all the data for it, and automatically the tax components are extracted and inserted into the transactions there within Simple Fund 360 and SimpliVest 360. The create entries process, where the member turns 65, it will now automatically transfer profit to unrestricted and unpreserved. And the bank authority forms, I think we completed all the rest of the banks that we have for a signature check. So that means for any of the new bank feeds that you're uploading, it'll go through and obviously make sure that the form is both dated and signed. We had to throw a property valuation minute. Obviously, with all the property values being added, it was something that was requested, and the entity dashboard would added a new status on there for the where documents are being sent out digital signing for that particular financial year. We added some actuary certificate improvements. So these are included the ability to automatically select the last actuary that you use, so you're not constantly having to select the actuary. So just trying to save those little clicks. We've also added the ability that where data has changed to automatically then drop the status so that you can resubmit that through to the actuaries. We added a lot of document screen improvements around filtering and sorting columns as well. For Simple Invest 360, we added support there for Division 7A loans. So that was a calculator and tracker for all the particular loans. Later in the year, with the where it says coming soon, we obviously added the ability to then post the journals of particular entities. Create a UPA for a corporate beneficiary, and we'll produce a summary report from the screen there as well. Throughout August too, we actually ran our other live events, RegTech 2023, which is more focused, I guess, on that high level across the entire sort of accounting industry as such, and providing technology updates. We're also, showcasing some of our upcoming sort of brand new features there across the BGL product suite. So you can see Aaron there on the bottom right, and again, always involved and a key sponsor as part of RegTech. I don't know, Aaron, anything you want to add there?
Yeah, it's great. I mean, I've been involved in these events obviously since they started. I was the first MC, I think, for the first 2 years from memory, and so I've done my dues. And I know you bail me up on the microphone as well, Geez, because that's I think that's the only thing that you do at these events, rather than let Daniel take the show, and Daniel and Ron take most of the show. And yeah, if you haven't been, I think it's great because you get some real practical insights from some of the wonderful industry leaders. Steph, you can see there on the screen, has been, I think, probably the most requested back, the number of times she's actually been there. So yeah, if you haven't been to these events, make sure you come along to the 2024 ones. It's a great opportunity to find out more, talk face to face to the plenty of BGL employees that go. Not only the relationship managers, but the staff that work on the projects throughout the years as well. So it's just a great opportunity to A, fill up your CPD, but B, find out not only what's happening at BGL today, but what's happening as it progresses into the future, and then the partners that sit within the ecosystem, of which we're one of just a lot is probably now the right answer.
That's right. Yeah, I think it started very small, and now it's probably, I think, 30 different partners are some of the bigger ones. So.
Yep.
Cool. And then, Aaron, you talked about the electronic execution law.
Yeah, so this is one that's quite interesting. And, Jez, I might just get you to sort of open the whole thing up here. So the one thing I'm just going to note for you here is for SMSFs, the reality is you still need to be quite careful about what documents you can and can't sign electronically. Okay, so the Corporations Act has opened up in around October, November this year, that in essence, anything that can be signed or notice provided under the Corporations Act can now be done in a technology neutral way. So that previously had been things like deeds and constitutions, but now can operate with things like appointment of directors and those sort of notices. But the SIS Act and regulations still are excluded from the Electronic Transactions Act applying unless an exemption exists. And what I mean by an exemption existing is something like the financial statements. So Section 35B allows for the financial statements to be signed in either way. So they can be physically signed, or they can be signed digitally through either in a scan copy and send it through, or a document signing service like FuseSign or DocuSign or so forth. So you need to be careful if you think about a fund establishment. So the deed, yes, it could. Something like a trustee declaration, which requires written form under Section 104A of the SIS Act, that you can't. And then you get to other things like, for example, your applications for membership. Well, all of that is going to be dependent on what your trust deed says, which is why I go back to what I said earlier with the changes that we made in our deed to ensure that those sort of things can be done in a technology neutral way if you want to do so. So I guess that's the lay of the land as it is at the moment. We're hoping that Treasury might look to finalise this project, because the SIS Act and regs are just about the last thing that they need to do. There is, I guess, some conjecture around how they might approach the finalisation of these measures with testamentary documents like a binding death benefit nomination. It doesn't really have great relevance to SMSFs because ultimately what your deed says goes, as we know from the Hill and Zuda decision. But yeah, that was just something that's worth flagging because it has continued to evolve even from the periods during COVID and then coming out of COVID, but we don't actually have finalisation on this modernising of business communications framework that had kicked off in December of 2020.
Okay, over to September. So September's a month that Aaron likes to forget as he's an Essendon supporter, but you know, we obviously improved the Division 7A loans, and that allowed obviously those enhancements I talked about before with the ability to post transactions and export to Excel. We added a new report in terms of the tax estimate or pay-as-you-go estimate, so really giving a breakdown of the actual calculation in addition to the statement of taxable income. And then Aaron, you lucky enough got the hot topic of the gnarly measures.
Yeah, so then what we did see is the introduction of these measures into Parliament. So we have a Treasury Laws Amendment bill that you can see there. And as we mentioned before, the government did settle on this 2 times multiple. So what is important to remember here with these gnarly rules is it does only relate to general fund expenses. So we're looking at things like accounting fees, auditor fees, investment advisor fees, as long as they are generally connected to the fund on broad asset allocation rather than specific assets. And we had the ATO provide us with the compliance relief, through that PCG 2020/5, but that has ceased at the 30th of June 2023. So the most important thing here is if you haven't looked at this in the context of sort of what I'd call related SMSF. So if I take, for example, with my SMSF, if I'm undertaking the work through my firm and I'm not charging a fee and I'm doing it in my individual capacity because I'm using Simple Funds 360 to prepare it, I might be having my staff actually preparing the work. If I don't charge an arm's length fee here, then I do risk tainting the difference between what should have been charged and what was charged at the non-arm's length rate, which would then have that multiple of 2 applied to it and then the 45% tax rate to it. So this has become law in essence from the 1st of July 2023. However, it hasn't quite yet passed Parliament, and I'll give you a bit of an update shortly, but on the basis that it does in its current form, which it is now expected, getting your affairs in order, and I say getting our affairs in order because a lot of this will impact accountants that have their own SMSFs, advisors that have their own SMSFs and so forth, getting your affairs in order and adjusting those or looking to policies that you might have internally to support why you may have done something will become quite crucial as we move into that 2023-2024 tax return and audit.
If anyone interested, if you go back to the September webinar, Aaron covered a lot of case studies there, especially around the sort of accounting and admin fees. And there was probably I know a lot of questions on that were covered off. So I suppose if you do want to revisit that, do go back to the September webinar.
Yeah, and we'll be naturally talking about that quite a bit again in our SMSF days.
Yeah. Okay, over to October. So another property valuation provider, Acumentis, added, as you can see there on screen, offer valuations there, sorry, for residential, commercial, rural and agribusiness. We released a brand new security screen, so we're trying to make the process of particularly checking prices, especially for unlisted properties, custom securities, etc. Trying to make that a lot simpler, easier to insert prices, etc. So that screen's been added in there, and Division 7A continued to be enhanced with adding a transaction there as part of the year-end compliance process. And we also added there the ability to register for training with an entity called Tax Nuggets directly there through the screen as well. Workflow, we added the, I think screenshot's missing, but we added the the workflow module into Simple Fund 360 and SimpliVest, so the ability to track jobs and tasks, see what the right truck status, have a checklist and actually report on that. So again, go back to the October webinar if you'd like a full run through of that. It is available to now, I think at the time it was a sort of open beta, and it's now available to everyone. So you should have that there on your menus. Aaron, we got a name for the
yes, we did. Yeah, so our 15% earnings tax on high balances above $3 million. If you tried to say that 5 times in a row, it was a struggle. So we then got what we now know as our Division 296 tax laws. So we saw an exposure draft, again, went out for consultation. Consultation was 2 weeks, so you kind of got a read of the room as to how the government was going to take on board that consultation. But we did touch on a lot of these things like the new concepts. So the concept that our total superannuation balance from 30 June 2025 is actually going to change. So there will be a definition change there. We've got our calculation of how we need to look at earnings, because we're not only just looking at our TSB at the opening and the end of the year, we have an adjusted total superannuation balance that needs to factor in things like withdrawals and contributions. And those withdrawals and contributions aren't just what you typically call withdrawals and contributions. There's things that impact like TPD payments, where an individual dies and so forth as well. So we got a consultation. We weren't necessarily happy with the exposure draft. It had a lot of holes in it, I guess, we were that within the SMSF industry were concerned. And the big ticket items, unrealized gains, and the lack of indexation carried on as from the original announcement back in sort of February, March 2023. Yeah, we probably won't worry about too much G's with some of that stuff there. You can go back and have a look at that at the right period of time. We had been working on as well, I guess, a new document platform. We got a number of our members in a closed beta environment there. One of the other things we're working on is BGL provided us with some updated endpoints to be able to deal with deed upgrades. So if you track your history of your funds deeds inside of Simple Fund 360, we'll be able to grab that data to be able to generate some of the documents. If you do a deed upgrade on Simple Fund 360, you'll be able to push back that information about Smarter SMSF as the provider, the date that it was done, push the document back in there as well. Again, we've got that as part of our closed beta at the moment. And then as we move to open beta in the new year, that will be available. We made a number of changes to our SMSF Essentials course. So we had rebranded our Foundations course. I'll explain a little bit more about that shortly, but it does, in essence, fit into what we call our Starter, Smarter, Smartest model around our education. And the reason, I guess, was the fact that we are introducing a more foundations level course, so a beginner or starter course that we've been sort of working frantically on. We're hoping to have it in November, but it's pretty much coming out in early January now.
Cool. So over to last month. So for Simple Fund 360 and SimpliVest, we added an integration there with Crypto Tax Calculator. So similar to the one I mentioned earlier, has the ability to import from different crypto exchanges, DeFi, via API or CSV, report on the particular portfolio, and obviously calculate CGT and bring that there directly into Simple Fund 360, including all the transactions. Obviously, if you are using Crypto Tax Calculator, they must be on either the investor or trader plans for the particular portfolio. We added a brand new screen there, which is our cash flow screen. So that provided the ability there to report on the cash flow for the particular entity, had custom labels so that you can customize the report and had a lot more flexibility, had different comparison periods, and could be produced directly from that particular screen itself or the report screen. We are planning to do the same for the balance sheet and operating statement, which are in development at the moment. We combine work papers with our workflow screen. So when the status changed to ready for review or completed, it would automatically update the task on the workflow screen, which had that particular trigger attached. Division 296 sort of wrapped up, I guess.
Well, it wrapped up enough to be introduced as a bill into Parliament. So we did see, I think it was on the 30th of November, that Treasury Laws Amendment Better Targeted Super Concessions Bill get introduced. Interestingly, on the very last afternoon in Parliament, we did see this bill get immediately referred to a Senate committee. So naturally, a number of these concerns that have been flagged throughout the year. Now we will see, I guess, the various bodies that have been raising these concerns get an opportunity to make further submissions to the Senate committee and probably appear before that Senate committee with the report due back into the Senate in April 2024. So the reality is we will likely get some regulations, because I would believe that the Senate would want to know from a regulation point of view how some of these things are going to work before they can make an informed decision. So we might see some of that this side of the of 30 June. Whether we see this law finalised before 30 June is another question, given the time frame of the report back and then rolling into the federal budget, of course, in May. That will pose a problem, I think, with a lot of clients who, in that level of account balance, want some time to be able to make decisions. So are we going to be making decisions for them with unresolved legislation, or are we only really going to have that one financial year in the lead up to it to be able to potentially do a number of transactions? So in my view, it does create a potential risk and problem for some of our clients. So we will follow that naturally very closely into the new year. The other bit, just to finish off, of course, was our gnarly stuff. So as I said, this went down, in essence, an identical path that we've now seen with the Division 296. And ultimately, we did see this get referred to a Senate committee. But what the Senate committee has come back with is ultimately to support this position. So the fact that this two-time multiple to the non-arm's length rules in respect to general expenses only, not specific expenses, is now likely to proceed in its current form, which is why I make that statement to you earlier. If you haven't got your house in order, start looking to do this, because it will likely go through and receive royal assent in the new year. The other interesting thing from this was, as part of the Senate response back, the Senate senators, a number of senators, did also raise the issue from the integrity measure side of things, whether there might be some necessary further adjustments specific to SMSFs around Section 109 with arm's length dealing. So again, just something there to note as we move into 2024 as well. But those two items, which we had the entire year to kind of follow, we got closer to the conclusion, but we never reached the finish line in 2023. But I suspect we will in 2024.
Okay, over to December now. So in terms of Similar Fund's product releases, we release a new entity setup service, so where you are taking on existing funds or moving from one of our competitors. We've made the process easy. That can be done directly now from the software using the BGL's client success team. So that's going through. In terms of, I guess, what we utilize this period for is doing a lot of technical upgrades in the background, the stuff that you don't see, and do that while sort of teams are on leave and clients are on leave. So as you can see on the screen there, a reminder that the BGO office is closed there from Christmas Day to the 5th of January. So the support services will not be available between those two dates. And obviously support will resume from the 8th of January. Aaron, what's happening?
Yeah, so the last thing I was just going to mention here, because I do know we quite regularly get phone calls at this time of year saying, how do I kind of fill up my CPD? So one of the ways in which you can do that is obviously with our SMSF courses. So We have, as I mentioned before, rebranded our foundations course. So Norman at BGL, if you want to access this via the BGL Learning channel, you'll be able to do it there. Or alternatively, you can do it via the Smarter SMSF website. But one of the things, as I mentioned before, is our Starter Smarter Smartest model that you can see there. So whatever sort of stage you're on, the journey with your SMSF expertise, we're building courses in essence to be able to suit that skill level. One of the most important things, and we only actually announced this yesterday, and is that if you complete either our SMSF Essentials course or our new SMSF Foundations course, so we are literally putting the last couple of modules together at the moment, you will now get access to receive a complimentary period of membership with the SMSF Association. So if you do our SMSF Foundations course, which is really a beginner course, if you've got offshore teams, if you've got admin staff, a graduate starting, that's the perfect course for them. 6 modules, 10 hours worth of content. And they will get, if they successfully complete, they can apply for a complimentary affiliate membership for up to 12 months. So in essence, if they completed it, say in February, they would get that through to the 31st of March, 2025, because the 31st of March is the cutoff each and every year. For our Essentials course, which is the current course, which is really an intermediate level course, 7 modules, 18 CPD hours, that is the one that is currently available on the BGL Learning channel. Again, there is a complimentary period of membership with the SMSF Association as an associate member. So this is a higher level of membership. There are a range of benefits that you get from it. But if you are starting that pathway to become an SMSF specialist, you can not only do the course, but then start to get involved with the member body, of which Jeevan and I are both specialists ourselves with. So you've heard us talk about the association throughout these slides. Us as an accredited educator at Smarter SMSF, we've worked quite hard with them, not only around the technical content that we deliver, but the fact now that we're trying to help deliver pathways for individuals who really want to focus their expertise in this SMSF area, knowing that there is a lot of work on and a real shortfall and demand for that specialist expertise.
Now, 2023 was a massive year, Aaron. So I think
was.
2024 is going to be even bigger. So for one thing, I'm putting a slide in there, but something from the BGL perspective, some of the things we're working on is to integrate there with open banking. So that'll allow you to get bank feeds for every single bank in Australia, term deposit, loan accounts, etc. We're going to add an audit management screen so that you can track where audits are at, get updates via the APIs, etc. We'll be adding a whole bunch of different dashboards, as well as finishing our transaction recode product. As you saw with our Smart Docs technology, that will continue to advance. And obviously, with that, there's a lot of AI being used. And obviously for 2023, the biggest AI was ChatGPT out in the wild world. So, and from a BGL perspective, we're looking at the moment at generative AI and planning to release some things around that during the month of February. So look out for that early in the new year.
Well, that timing will be quite interesting, Jeez, because I reckon we are playing around with some of that as well. So on our new platform, we'll be using some AI to be able to look at and ask questions about some of our documents. So if you want to know, what the rule is that has the power to appoint a member, or what the process is, that sort of thing. And then also on an AI perspective, looking at adding it into our course content so that users will be able to, if you don't quite get it, if you've listened to it, you've read it, you'll be able to ask it questions. So Tim and myself are kind of filling it up at the moment with a whole range of content and topics, because I guess the advantage of the AI technologies is not only what's there, but you can actually feed it with its own information as well. And I guess being a technically content-rich business, where we're trying to teach it along the way as well. So that's clearly a big focus of what we're doing as we move into 2024 as well.
So it sounds like, as I said, 24 is going to be an even bigger year.
Yeah, absolutely.
Cool. So it looks like we don't have any questions, obviously, being a summary one. So I think we'll wrap things up. So Aaron, thank you very much for this year in terms of, like I said, attending each and every webinar, providing technical content and
pleasure.
updates across the year. And thank you for everyone for attending this year. So whether it's this webinar or any BGL or Smart SMSF webinar, we should say, during the year, we thank you. And again, if there's any sort of feedback you have for Aaron or myself, if there's any different format changes, things you'd like to see us cover during 2024, feel free to let us know or reply to the emails we send out, and provide any feedback that you do have. We'd love to hear any feedback you do have. And I suppose for everyone, have a great Christmas, Hanukkah, New Year period, break from work, whatever you'll be doing over the next few weeks. And we see you in 2024.
Will do. Excellent.
Okay, see everyone. Bye.
Thanks, everyone. Bye for now.